Okay, so this video is for those who cannot pass a funded account, or for those who, as soon as they pass or very soon after they pass, simply blow the account. So trading funded accounts is going to be a little bit different from trading private capital, and that's mostly because of the rules that are pushed from the prop firms to the traders for various different reasons. We're not going to get into those in this video, but maybe sometime in the future. So the biggest one is going to be the overall drawdown limit, right? And most prop firms, that's going to be like 10%. Maybe some have 12%, maybe some have 8%, right? But in general, most of them move around 10%. Okay, so that's the negative side, right? But for you to actually pass the account, you have to reach, again, anywhere from 8 to 12% profit, depending on the company and the program that you're choosing. So essentially, it's a 1-to-1 in risk to reward ratio. That's for phase 1, right? Then you also have the phase 2, where the hard limit stays the same, but the profit targets cut in half. So most of these challenges aren't blown because you're using excessive risk considering the capital. They're blown because you're using excessive risk considering the drawdown limit, right? Imagine this. If you're using 1% per trade in risk, you only have 10 trades available, or 10R in drawdown available, before you get stopped out. And with most profitable retail systems, a 10R losing streak somewhere in the next 1,000 trades is not only very probable, but it's almost guaranteed, right? If you're trading a 1-to-2 system with a 40% win rate, in the next 1,000 trades, you're going to hit a 10R losing streak. So it's not a question of if, it's a question of when. But that's already considering that you would be a perfect trader with a perfect plan, a perfect record, a perfect risk amount, understanding. That's not considering that, 95% of, or more of you are actually, beginners, intermediate people who still don't completely understand what trading is and the math behind long-term profitable retail trading. That's what I'm trying to teach you here, right? So you're very likely over-risking, right? If you're doing 1% per trade, you're over-risking. If you're doing 2% per trade, you're definitely over-risking. There's going to be a couple of people here who are going to say, but okay, if I don't risk a full percent per trade, or maybe 2% per trade, I'm never going to pass the account. And yeah, that's a good point. It's going to take longer for you to pass, especially if you have a lower trade frequency, right? If you're trading swings or positions or whatever, right? But that doesn't matter. The goal is to pass. The goal isn't, to pass in 1 week. Because if you have a goal to pass the account fast, you have to understand you're just going to blow 5, maybe 10 accounts before you pass a single one. And that would maybe be okay if you were then able to keep the account long term. But most of you can't, right? At least that's what the prop firm statistics say. A bunch of them are posting monthly results, quarterly results. We're selling 100,000 challenges. People pass, 5% of that, and 5% of people who pass get to the payout, and then 5% of the people who get to the payout from the people who pass, blah 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 blah, is actually the amount of people who can keep the account long term, and that number is basically close to zero. It's okay if you want to pass the account fast, right? You can risk 2-3%. Of course, you have to be wary of the daily drawdown limit, which also exists in the prop firm space. It's usually between 4-5%, right? Doesn't matter. But the thing is, if you are overexposing yourself at that level, you will very likely fail multiple times before you pass an account. That's just facts. Okay, so be prepared to lose multiple accounts if you are planning on, being aggressive. If you want the speed, if you want to speed run this thing, you're gonna lose multiple accounts. Okay, but let's just say that you do actually pass. The same maths apply further. You want payouts, right? If you want payouts, there's two things you can do. You can risk extremely small percentage amounts like 0.3 or maybe 0.5% if you have a very, very good data-backed system, that says you're very likely to do this for a longer period of time before a larger losing streak comes in and, I don't know, either wipes you out or puts you into deep drawdown, right? You can get away with it for a long time with 0.5% risk per trade. But with limited risk comes limited reward, right? That's just how trading is, right? If you want to be a long-term profitable, consistent trader, you have to, limit risk, limit the reward, gather as much capital as possible, and then, try and grow that with time, right? But if you are a victim to the YouTube gurus who show you how to pass accounts fast, get payouts fast, and then, when you blow the account, just repeat the process, right? Well, I have a very strict opinion about that, but you can do whatever the fuck you want. You're old enough, you have your own money, it's your time, and the success rate isn't even all that bad, right? You're gonna lose a bunch of accounts, you're gonna lose a bunch of money, but when you win, when you get to that streak, when you have a good run that's pretty much based on luck, not on proper risk tactics, you're gonna get a lot of money out of it. But, and here's the big but, prop firms have started denying payouts to people who do that, who speed run challenges, or maybe even buy two accounts, pass both of them by some sort of luck, and then just full port one to the short side and one to the long side because, one of them is going to win. The payout is almost guaranteed, right? Especially if you buy in two different prop firms, because then they don't have the hedging data and they can't ban you. But they do not like people who request 1 time or 2 time or 3 time high percentage amount of, the payout. If you're trading a 100K account and if you're requesting a 20% payout, something's wrong. You're doing something incredibly wrong. Either you're over risking, either you're over trading and hitting a lucky streak, a combination of both, whatever. But if you're using proper, consistent risk tactics with proper, measurable, repeatable execution, you're not making 20% in a payout period, right? That's fact. So if that's what you want to do, you can, and there are still prop firms that will likely pay you out. But again, keep in mind that you're losing most of the time. If that's all that you're aiming for, a 20% payout on a 100K account, 1 or 2 times per year, because that, let's face it, that's probably your max, considering that things are going to go very, very much against you. If you're willing to risk the denial of a payout, that's completely fine. You can do that. There's math that supports a trading model like this. But if you ask me, it's just not worth it. I know a lot of people who do this, but then, cry because they get denied a payout, they get rejected, they get blacklisted, banned, whatever. And it's not necessarily that they've been doing something that's, extremely wrong. It's just that the prop firms don't want that. Prop firms don't have anything worthy of, your data because it's useless, it's the wrong risk, it's the wrong approach, it's inconsistency, blah, blah, blah. You're just hoping for that lucky streak to milk the prop firm. And to be honest, why would anyone back you, with capital if you're going to do that, right? You're not going to get private investors. You're not going to get capital. So why would a prop firm whose business model works based on people putting money in and not people pulling money out, why would they, trade with you? They don't give a shit.